Hi, good afternoon, everyone. This is Baja Pips. I'm just recording a very quick video. I'm going to start doing this for my Discord community. So if you are active in my Discord, you'll start to receive video breakdowns along with the picture analysis I've been sending. I want to go over Euro USD as I see it's going to be one of the key moving pairs of the day. We're currently in the European session, and I do suspect London breakout happening any moment now. So it's a great time to record. I want to start off with a 4-hour and explain my positions and why I entered where I entered. A couple days ago, it was about the 20th of September, beginning of the week, and I did enter some shorts. I had my first sell, but I had explained in my previous video, if you can check it out on my IG Live and also on the YouTube, or if you're in my Discord, just scroll to the post from September 20th or the 19th, and you can see my video breakdown and the links. But in those videos I did explain that I did see a potential breakout and a pullback is possible towards the 6.618, but it may be unlikely seeing the current momentum and volatility towards the downside. I don't believe that it's going to push back up past 17,500, and so I entered trades. I'm kind of a FOMO trader, so I do still, even at this level of trading that I'm at right now, I do still have the fear of missing out. So I like to enter market orders. That's just my habit. And if you're like me, I would recommend always placing market orders. You never know when the market's going to take off. And unless you're that seasoned of a trader, it's just best to at least put something down and be a part of the action rather than completely missing out because you want to be patient and disciplined, or quote unquote, a disciplined trader or whatever. Sometimes it's just worth entering something. So my initial position was going to be up to 2 standard lots on this specific account. As you guys can see, this account is running at 72,629 GBP. And so I wanted to risk about 1% of this account on this specific trade. You see 351 GBP plus 310 is 660 plus 270, that's about 800. So it's about 1.2% of my account being risked right now, so it's not that much. But this is all practice. This account, believe it or not, is a practice account. I don't suspect I'm making a lot of money from this, but when I do take off, which is going to be soon, this account should be up towards the high 6 figures. I plan on building it to 500,000 by the end of the year, but that's in a later video. But yes, I'm risking about 1% of this account. I do suspect it to drop off towards the lows. I'm looking at my first real profit target around 1.66, and my second profit target around the major key level of support around 1.60. When we look at the daily, we can see that is the key level of support, and I do see the bear rally breaking down past that towards an extension. That would be my first level of support as I look at the weekly, and I do see potential struggle before it does crash below. It has a nice decline, so there's about 3 potential targets I'm seeing right now. Just to highlight it for you guys, 1.6648 around there. Second target would be around 1.60 flat, and the third target would be around 1.48, 1.47, around that area. But we'll get to that as the market matures and the price action develops. Let's get back to things. Once you see what you see, you can understand that price action currently rejected off of the 0.17500, and it is currently retesting that. There was a very strong signal off of that 0.1750 psychological area, and if we draw a Fibonacci, which is what I wanted to highlight in this video, this is what we're going to get. Let me erase that previous one, keep the chart clean. We can see price went up towards the 0.618, not necessarily hitting it, but it's close enough, and it rejected from that 0.618. Now, is this a valid 0.618 rejection? If you did have the 0.5, it would be rejecting off of that. Yes, 0.618 sometimes does not get fully met, and there could also be more of a rally towards that area to make a second attempt, which would take up these highs. That's why I don't recommend putting stops right above these highs. I mean, it's a pretty obvious place to put your stop, so if there are stop hunts, it's going to hit you. So, I have my stop widened to the highs of this current downtrend that started beginning of this month. Let's go back so we can see this downtrend started at the beginning of the month, and September 6 highs, I don't foresee it going that high. And yes, so let's get back to it. So there is a strong rejection. There are some candlestick formations that should hold valid, and right now we're testing the lows of that. I call this the morning star, and as you can see, it's setting up as a morning star pattern. Crashed down below. Now price is kind of testing out that morning star. This hour, the hour of the London Open, is going to be a major hour. That's what we're seeing right now. Price could either continue on up, crash towards the highs, retest 1750, and either potentially go up more. And if it does hit 1770, I do see price potentially pulling back a little bit further, unfortunately, towards 1800. But if it doesn't go that high, I do see it potentially rejecting anything below 17,500 highs. It could even climb up and retest these highs, but I do see price crashing down below, taking out the lows of 1700 and taking the continuation on downwards. So that's my playbook for the session. Just gonna have to wait and see. I have other pairs that I'm going to break down as well, but this is just Euro USD. Let me just go over GBP AUD real quick as well. Currently we are seeing a struggle. The 0.618, which is about the halfway mark of this current uptrend, has not been visited yet, so there is potential that price action could shoot down about 130 pips, test out that that halfway point before taking off towards the upside, or continue on down towards the downside. Unfortunately, this is the hour 4 time frame, so if it does crash below that and continue on towards the downside, I'm actually opting out of this trade, because that means that on the bigger time frame, as we could look at here, it could have a bunch of pips before it retests that, and I don't want to wait 300 plus pips just to see that I'm wrong. I'd rather get out early. That's part of the updates of my system, is I'm allowing everyone to get out earlier rather than sitting there for a couple weeks and just to find out you're wrong. I'd rather find out that I'm wrong within the first week of the trade. Saves a lot of time and could focus our attention on other pairs. But as of right now, just to sum it up real quick, for time concerns, GBP AUD, I do see that there was a recent large bearish thick candle. This might have been profit taking for price action that happened and occurred during the 21st of September. And this is, I believe, it's a bear trap. So the fact that you guys can see price did shoot down from the highs about 70 pips, and for the next, what is it, the next 11 candlesticks, the next 10-11 candlesticks, it failed to close below those lows. If this was actual real volume and momentum, we should see price crashing and following a follow through towards the downside. So this is a very big signal that this could be just a false breakout. And another key thing to take is that it did not happen at a resistance. I don't consider this major resistance, and if it happens somewhere maybe above at 0.95 or 0.90, then we would be seeing something a little bit more believable. There's 0.90 right there, but if I seen it happen at around 0.95, which is my first marker of a key resistance, that's when I would draw suspicion towards a bear rally towards the downside, but I don't see that happening. So yes, false breakout, very low, lots of weakness, and all I'm waiting for is the highs of 0.8500 to be taken out, so which we can see right here. It's about a 15 pip zone. Once that gets taken out, we should see momentum pushing, breaking out these bears right here, and stop losses are going to get hit, and we should see it rally towards the first zone. That's not my initial TP zone, that's just TP1. I have TP2 set up slightly above at 0.91. Around that zone would be TP2, and long term, if it does continue for the remainder of the month, I do see it going and climbing up potentially towards 2 flat, which would be not all-time highs, but definitely would be yearly highs and signal a potential bull rally for the next year. That's awesome to know, because if things like that happens, it's great for long-term investors, for swing traders, and for day traders alike to all be able to eat off of that brand newly established uptrend. But that's all I have to say for these two pairs. Let's just pay attention. I'm currently in drawdown, but that happens. When you put market orders down, you don't get the best price, and so I got to give some back to the market. But follow up on this towards the end of the week. I'll let you guys know if I took wins or took losses on these, and yeah, that's about it. All right, guys.